This word risk, both the financial industry and the financial media tend to think that this word risk is predominantly a negative term, as something to be avoided or a threat. In the investment world, you cannot separate risk from performance, and rather than discussing whether desirable or undesirable, it's simply necessary. Understanding this term risk is one of the most important parts of financial education. With this in mind, it's important as an investor you must understand that there's only two ways you can deal with risk. You can decline it or you can accept it. Declining risk is when, of course, you make the decision that you will not accept any risk in your investments in your portfolio. This approach may be extreme and often dangerous, as you can almost guarantee that you will have problems in the future with not having enough dollars to keep up with inflation and probably not being able to maintain your then current standard of living. Now, if you accept risk, we will either accept a certain type of risk or a certain degree of risk, but each investor differs in the amount of risk he or she is willing to accept. However, accepting risk is the first step. You then must decide whether you're going to manage it or transition it. These days, transitioning is very popular as there has been an explosive growth in the sale of variable annuities with income and living benefits. Transitioning basically means you're sharing the risk with an insurance company. Now, this is usually an expensive product-based approach that can not only cost you in additional fees, but will cost you in future returns as well. While some investors can find some value in transitioning risk to an insurance company, and in some cases may find some comfort, we feel that a more prudent and better overall approach is to manage the risk through proper portfolio allocation, planning, and education. The approach this approach should incorporate a properly asset allocated portfolio spread among a broad global low cost asset classes and rebalancing that portfolio over time to keep a portfolio within an accepted level of risk. It should also incorporate no market timing, no speculation and or gambling, and an ongoing process for you to better understand your investments, your plan, and your personal purpose. Now, let me tell you what is happening in the financial industry that to me, I find it a little disconcerting, especially after what happened in the markets in 2008, 2009, 2011, every time there's a downturn. Is that the new industry way of dealing with risk is to tell you that the prudent approach, which is all the basic simple stuff that we talked about earlier, broad global allocation, low cost portfolio, rebalancing, planning, and education, it doesn't work. And they even go a step further and tell you that it never worked. The problem is that their new normal way of handling risk is to tell you that because of the increased volatility of the recent markets, you need to trade more. You need to market time more. Obviously, not you, but let them do it more. Now, you must understand that trading more, market timing, speculation, this adds more risk, more volatility, more cost to your portfolio and investments, which over time only means one thing. Your returns will suffer, and which means your wealth will suffer. And if that does not work, then what they say is just buy more variable annuities. So who wins? Well, it's certainly not you. Increased trading costs money. Increased benefits in variable annuities also cost money. Whose money? Well, your money. Now, if you're an investor, especially one that's close to retire, you must enlist the help of an investor coach. Yes, like myself, and yes, this video is self-serving. But a coach gives you peace of mind so you can stop worrying about your future and begin sleeping well at night. It helps you find happiness as it guides you to the truth of investing and begins to simplify your financial picture. A prudent plan, a prudent portfolio, and coaching is what I call a financial stress management plan. Because when bad times hit, and they do hit from time to time, you are going to be ready.